Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 0.63% to $41 and $90. Ethereum up 1.51% to $29.04. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Thank you for being part of our globally extended family. I appreciate you being here. I leave many links in the description of these videos. Just go to the Show More section and you'll get a drop down. That's how you get to the masterclass and various other recommended resources that I have there for you. In yesterday's episode, we were talking about scammers. That scammer has been removed and they had 245,000 followers, and their video has been terminated, as has their account. Woohoo! A lot of people, when they get into the crypto space, they think it's just about buying and selling, picking a project and going for it. Actually, it's not. It's about psychology. Rule 570. Psychology sets profitability. In crypto and in life, our psychology is always being tested. As a community, we subscribe to a positive excellence life trend. That means that we acquire increasing amount of strength over time. Life is always an up and down process. We hit resistance in our life. We get a diversion, a setback. Things get dark. And we always say the sun will come out again. You're just going down to a level of support, ready for a next promotion that will shoot you past that previous level of life resistance, up to the next level of life resistance, where you'll get a pullback, set up at support and shoot up. This is the way in life and also in crypto. I'd like to introduce you to the Investader. Hasta la vista, baby. He is the Investader. Wow, special guest, Arnold Schwarzenegger. Thanks, Arnold. So what is an Investader? It's the combination of an investor and a trader. And how does it actually occur? When we look at the investor's journey, people define themselves initially as investors. They are addicted to the news and they're thrown around by fear, uncertainty and doubt, FUD and FOMO. Not knowing the rules of the market, they buy on green and they hold on for dear life. They hodl with huge amounts of stress. Why do they do this? Because they want 1000% returns plus, and they want to minimize tax. They become aware of trading because all investors become traders anytime they buy or sell. But traders approach the market incredibly differently. They use volatility as their best friend. They understand how percentages work. They look towards timing the market. They go independent of the news because the news is basically fluff and it's only there to instill a lot of fear into the retail market. They use the CTKS method for marking up their charts and they buy on red and sell on green. They do the BORSOG process. So what makes the change between an investor and a trader? Actually, there's no change. They just become both, an investor and a trader. An investor, trader, an investator. Sorry, I'm having a bit of fun today. So the concept is, how do we move between block 2 and block 3? Investors want that 1000x return. They want to retire, absolutely. But how you actually do it, how traders, professional, smart money thinkers do it, is they just go after a certain percentage per week. And you won't always get it every week. Sometimes you'll have to wait, and sometimes you'll get way more, and sometimes you'll get way less. But if you got just a standard 10% per week, that would actually accrue up to an 11,639% increase over time. We're not saying that we want these, but just that it is possible with small percentages. That's the important thing. And then we look at tax differently. We see tax is success, and it's a contribution back to roads and schools and parks and all sorts of things. We, of course, want to minimize our tax, but we have a different mindset, a mindset of positive excellence and contribution to this world. A lot of people, when they look at a percentage gain, for example, over a week, going from $1,000 to $1,100, which is a $100 gain or 10% return on investment, when that's annualized over 52 weeks, that turns out to be quite a lot of money. And how much money does it become actually? It's $1,000 to $117,390. Now don't forget that we're not actually after these kind of returns, because there's a science to what we do and we just have to move inside the market. But it means it is possible, and when things are possible, it opens up a whole new life to people. What you get out of life is dependent on what you put into life, and that's a rule that we carry through life. All of us are subject to that rule. You need knowledge. You need to know the rules of making money. Keep away from the rules of losing money. You need patience. You need a positive excellence, real wealth focus. Who you become when you get a lot of money is really, really important. And you need to buy on red, which is something that people, when they first get into the market, they wouldn't even think of doing it. The process to get to those returns, to be a trader, is to understand crypto technical analysis, to scientifically track investor attention. And there are a lot of foundations that people need to learn. There's a lot of rules. We need to look outside the crypto market, then back inside the crypto market for timing. We need to have our mindset correct, a professional contribution-based mindset. And it's really all about understanding that in this world, things are abundant, they're not scarce, but so many people have a scarcity mindset, and that can lead them down a road which can be a very dark path. Finally, we get into the buying and selling and applying different methodologies. Notice how this is not first, it is last. And this is a big reason why people actually fail when they get into the market. When they're new to the market, that's all they want to do, buy and sell. What do I buy? What do I sell? Where do I buy? Where do I sell? You need the knowledge to be able to go independent of the good intentions of other people. A lot of people in Zone 1 and Zone 2, they light switch in and out of opportunities. They tend to buy on green when things are going up and then sell on red when things are going down. But if you time it incorrectly, you can basically lose your account, and many people have done that. When we get into the making money and keeping money zone, Zone 3 to Zone 4, we scale into trades at levels of support that we've identified through the CTKS methodology and the actual psychology of the crypto itself. You can think about all cryptos being like people. They have a psychology. Some are energetic and bubbly and fun. Others are a little bit slower and more conservative. The whole reason that I created this masterclass is to give you the skills to do it yourself. Many people want to make you reliant on them. I want to make you reliant on yourself. A very lovely community member, Zen Anna, reached out to me on Twitter yesterday, and she shared her tweets with the public. Zen Anna, so naughty. Basically what she said, I DM Ken, direct message Ken yesterday for help regarding the masterclass, and he responded with a very long and very kind message with lots of insight. Here is basically the gist of our exchange. Me, Ken, I can't do this. Can you do it for me? Ken, nope. I'm here for you. No quitting. That's a very condensed version, but it was all about the concept that absolutely I'm here for Zen Anna, and I'm here for all of the community. I want you to succeed, and that's what I'm about. I was a lecturer for many, many years in first and second year statistics, and I love teaching, and teachers are a little bit different. When they look at imparting knowledge or sharing knowledge, they really care about their students. Real teachers want their students to succeed. And St. Anna said, "He's a true professor and mentor. Will always be there to help. Truly the best there is." Thank you so much, my friends. Very lovely. And Zenana also said, also, for anyone who sees this and is considering the masterclass, Ken makes it as easy to understand as it gets. There's no better method to learn trading from any angle. I just have to persevere and find the time. No more excuses. Well done, my friend. The link to the trading masterclass is in the description of this video. Please use that link to come across. It's really important that you get the right website. Scammers are just everywhere. I had a very specific reason for creating this masterclass. Basically, I was really quite ill and I was dying, and I wanted to make sure that I shared my knowledge before I went. And that was the reason that I created the masterclass. You can see my video on the testimonials section of the website. I feel that's really important to understand because I treat everybody as family. I want you to succeed. I want you to know and be able to do what I do. And that's over 30 years plus that I've condensed into the masterclass. On this particular page, the testimonials page, you can go down and have a look at feedback that various people have given who have either completed the masterclass or are going through it. One thing that we must do when we're investors and traders, we must understand how the main markets are moving. Also the growth rates of crypto, its adoption phase cycle. There's many things that we need to look at. And this is part of this outside trends. Masterclass students, you receive this chart in TM6. What we first do is we need to understand the level of fear inside the market. We've had a breakage in a very powerful upsurge of fear. It's coming down, which is really good. Are we out of the woods yet? Maybe not quite yet, but we're certainly getting really close. We're getting out of the woods. We've actually violated one level of support, turned it to resistance. That is really good. And this is what the VIX does. The VIX is really spiky. We have big, massive bouts of fear, followed by massive bouts of optimism. Massive fear, massive optimism. That's why we always say price moves in waves. But we're coming up to a level of another technical support. We must be aware of this. This is how professional investors and traders look at the market. When fear comes out of the market, economic confidence actually resumes. And we can see that in the NASDAQ 100. We've had a very large rally. We would expect to pull back to a level of support. That would be normal. When we look at economic concern as measured through bond prices, we're getting a collapse of economic concern. This is really good stuff for crypto and Bitcoin. And of course, no alt can escape Bitcoin's gravity, so this is exactly what you want. Another thing to bear in mind, bond traders are very intelligent people. If they're trading bonds and they're exiting the market, that means that they don't see economic turbulence ahead. And nor do I. I see that the market is going to continue up. Remember, price is always moving in a wave. And there's always positive and negative news stories. We can see gold came down to a level of support here. It's just under resistance. But we can see overall gold is on an uptrend. So don't be surprised if gold makes higher highs. We would anticipate that. The US dollar is coming down from resistance. We see bond yields, the inverse of bond prices, going up. This is really healthy for us. Notice Bitcoin's fingerprint on the background here. It's for many months. Basically, Bitcoin has been coming down. It's bottoming out. But yields are a really good indicator as to the direction that Bitcoin will go. We also notice a bit of a takeoff here in terms of oil prices. We said that we were getting into a level of technical bounce. That's a pretty fair bounce. It may go about halfway up to around this 114 mark. Let's see if it can actually make it past that. And we can see that the 5-year break-even inflation rate is still going up. Inflation tends to go up when markets improve in terms of confidence. In Masterclass LV14, we saw basically the Dow Jones falling, collapsing, coming down off a cliff. And I said, don't be too concerned. I think what we will actually see is higher levels of support actually developing. We've passed one of those levels almost to the T of when I predicted it. This other one is back up here around the 1st of April. We have to do this kind of analysis to understand if market trends are actually going to derail crypto or be supportive of it. And we understand that the news outlets they're very, very sensationalistic. They just want to give you fear. As investors and traders and crypto technical analysts, we are independent of the news. We can tell the news through the charts. What we actually see, Bitcoin doing really well, a lot of downward support here, or I should say upward support below the current price. It's looking really, really good. And we can see that we've actually made a consistent level of higher prices. We're always going in a wave, moving in a wave. Price is always going up and down. And this is where investing and trading differ. You can make a lot of money from these up and down movements. And don't forget, we're not after much per week. You might notice this little eagle guy in there. That's BORSOG. Hello BORSOG, how are you? BORSOG is BOR, buy on red, sell on green. It's just a way of collapsing a lot of really good rules for you. When you see price coming down and down and down, climactically down, we're in on those because that's what smart money does. Why does it do that? Is smart money dumb money? No, not at all. Because when price comes down climactically, it tends to reverse climactically as well. There are lots of rules associated with this kind of behavior. That's why we use the CTKS method to mark up our charts. When we look at Ethereum is getting over a level of resistance. I believe when this turns around, it's going to absolutely party. And there's a lot of really good news with Ethereum coming up. We can also see Binance Coin getting above a level of resistance, starting to consolidate, starting to rock and roll. We always want to get in on a crypto before it actually takes off. Sometimes people say, oh, I got in too late. The concept is we're always on the lookout to get in before everybody else does. That's what we do inside our community. It's not about just getting into something. It's about getting into it at the right level. And often the right level is this climactic sell down. Just notice this with XRP. XRP basically plummeted in price. And look what it did. It spiked. There's very specific reasons that this actually happens. Let's just zoom into this area because it's important to be aware of how percentages play out. And this is a big deal when it comes to actually combining the best strengths of being an investor and a trader. You must understand percentages, and percentage knowledge occurs on a variety of different dimensions. This is just one. This is downward volatility. So for example, XRP's price came down 34.64% over 20 days. Then it actually rallied back up to this point, 67%. A lot of people think that when something comes down 50%, it will just go back up 50% to retain its previous level. Actually, it goes up 100%. This is how you actually look at negative percentages. They're actually money in the bank. I'll give you another example of a really climactic sell-off. We saw XRP selling down here 40.89%. As a community, we love these. We hunt these. And they're very, very profitable. It came down 40.89% in just 4 days. and then it rallied 56% in 5 days and 8 hours. When we're talking about making a 10% return in a week, it is more than possible, but you must know what you're doing. It's really interesting, just zooming back out there, you wouldn't realize that there was nearly a 70% gain and an over 50% gain here. This is what actually happens with percentages. Okay, I'll just turn that off. So you can see that these big movements down, they are very, very, very profitable. That's what you want to get in on. And that's exactly the opposite of what traditional retail thinkers would ever do. Retail thinking is all about certainty, about going all in, buying on green, selling on red, all in or all out, just basically trying to grab anything and hoping with luck and prayer that it actually pays off. What you actually require is not that, because you'll lose money, guaranteed. Get away from certainty. If you find yourself saying, I need guarantees, don't go there. That's just a way to lose money. What you have to go into is probability and the laws of making money. To make money, as you saw with XRP, we buy on red and sell on green. But you don't buy on red in one day, sell on green in the next day. You need to time it, and that's where the knowledge comes in. Always remember, BORSOG, buy on red, sell on green. BORSOG is the eagle who comes in and swoops up the sells that everybody is selling. BORSOG is buying. BORSOG is smart money. There's some very interesting news on ADA coming through. There looks to be some positive price momentum behind this recent price move, but we were talking about ADA all the way down here at around 79 cents and saying ADA's looking pretty good. I was talking about it for quite a while. So for example, with ADA, over a week ago, I was mentioning that I was accumulating ADA. ADA looks really, really interesting, and it could go far higher than this. But the concept is, if we look at a price around 79.4 and just where it is right now, maybe I'll just lower that a bit to 911. Wow, what a price, ADA. It's basically come up 14.74%, and that's already better than 10%. But if you were really good in how you took out your positions, you may find how you did your buying and selling, you may even have got over 19%. The reason that the trigger section, the buy and sell section, comes so late in the masterclass, you must have all of these foundations before you do that. If you don't, you won't target your opportunities correctly. You won't actually sit with whatever that you go into and to allow it to reach 10% or whatever your target rate of return is. There's so much more to actually crypto trading than just simply buying at a level and selling at another level. You really need to know what you're doing. Unfortunately, a lot of crypto influencers out there, and I would say the vast majority, they know absolutely nothing about trading. I see them talking about trading and I just get shuddered. It's just like, what are you talking about? You're just going to mislead people. And these people can have hundreds, if not millions, or hundreds of thousands, if not millions of followers. Just be really careful. For example, the other day I saw one particular crypto influencer talk about Bitcoin's price action, not even in TradingView. Actually, they looked at it here and they said, ooh, I see a double top forming. Oh my goodness, just an absolute epic fail. There's a lot of reasons for this, and you should always look on log, never on an arithmetic scale. This is an exponential price action movement. This is not like the stock market. The CTKS methodology actually applies to exponential price movements, and you can see that the analysis of this chart is completely different when you turn it towards log. All cryptos are exponential asset classes. When you look over any long period of time, you must turn it to log. It's really, really important to do that because it will normalize equal percentage movements. That's what exponential price action actually means. It means constant percentage increments. And when you turn it off log, you'll get constant absolute increments. For example, 4,000 to 8,000, 4,000 gap. The next one is 4,000, 8,000 to 12,000. When you're looking at log, you're looking at an equal percentage measure in between all of these levels. It's really, really important to understand that. And I can't believe how many big influencers out there, and I'm talking, they have millions of people following them. They have absolutely, well, very, very little idea of trading at all. When we look at Solana, we can see it's under resistance, and when it gets above this, it's going to party. AVAX also has a very interesting structure, starting to get above this particular resistance line. But please note, by the time the public has caught on to the fact that there is, you could say, an advantage in getting into AVAX, the price would have already, in all likelihood, taken off like what happened to Luna. With crypto, you have to get in before others get in. And the reason for this is because the percentages won't work in your favor, and you also subject yourself to a great degree of risk. If you wait till you're certain that things are occurring, you could buy up here only to see it sell off. And that doesn't look like much of a sell-off, but believe me, it is. Only to say, oh, I got it wrong, I should get out. It's broken a support line, and these support lines could not be maintained. They're too steep. But the concept is that you would look at that and say, okay, I mistimed it, I'll sell, only to see it rally and say, oh, I was right, I'll buy. And then it comes down, oh, I'm wrong, I'll sell. And then it goes up again. This is the problem that faces the investor mindset. And it's also a function of the influencers always trying to hype and to scare people. And you can see how stressful this would be to want to ride a price movement like this. As a community, we're in before price moves. From a technical aspect, Luna is looking a little bit risky. It has moved too high, too fast. It would have a lot of people in Luna looking around now and saying, well, you know, that gave me a pretty good return. What else is cooking? Oh, you know, AVAX, that's doing well. That's above resistance. I can see ADA's had some good positive news and it's looking good technically. Binance Coin is looking very healthy. Bitcoin is also above a level of resistance. It's turned that to support. So that's also really good. We can see the market is actually turning around, and XRP is looking incredibly strong, and it's not surprising. It looks like XRP may win its case against the SEC, and that is actually very, very good news for the entire crypto space. We know that no alt can escape Bitcoin's gravity, so we need to understand what Bitcoin is actually doing. So what is Bitcoin doing right now? It's actually hanging around a previous resistance level, turned that to support, and these resistance levels here have been also turned to support. This is actually quite good. We're seeing a little bit of short-term weakness, and Percy has ended up where Percy thought he would end up, which is basically sideways at the moment. But note that it hasn't sold off. It hasn't also rallied. What it's actually doing, just think about what happens when you personally have a life pullback. When you get a pullback, you increase your strength, but it may take you backwards a few steps until you can actually rally and overcome that past setback, that past resistance. It's exactly the same with crypto. What is actually happening here is that Bitcoin is seeking to overcome past resistances. It needs to do this in order to actually go further up. So what's this guy here? Oh, that's Bitcoin Percy, the magnetic price sheep. Thank you to Nick. And what's Bitcoin Percy all about? These lines are like fences. They will shield Percy or stop or slow down Percy from actually getting through. And we can see this all the time. For example, if price is coming down here, it bounces on a level of support, tries to get above, bounces down, gets magnetized back, tries to hit another level, bounces again off the fence, bounces. It's always bouncing. Price is always moving in a wave, and that's why it's important not to light switch in and out of positions. It will basically wreck your account. And it's just normal for the crypto market. Crypto can move up and down in considerable increments. A lot of people say, Ken, why are you looking at the NASDAQ 100? Don't you know crypto is decorrelated? It's its own asset class. It's bigger than the stock market. We know that's not true. But the concept is, look at this. The NASDAQ 100 came up and it's been going down. You can see the directional correlation between the main stock market and Bitcoin has been playing out really well. There's two things to note. The cryptocurrency is around $2 trillion globally when this particular research report was done. Stocks around 120 trillion globally. Bonds 123.5 trillion globally. The potential for crypto to decouple from the stock market is zero. Absolute utter zero. And anybody who says otherwise, maybe not talking about decoupling, but actually decorrelating. Decorrelating is where they may move in different directions. You can see the stock market and the bond market. Stock market rallies, bonds typically go down because money is flowing into one bucket or the other bucket. If money is coming out of bonds, it is going into the stock market. It is going into crypto. Cryptos are really, really risky. The stock market is risky, but not anything on crypto. Crypto is incredibly volatile. What actually happens is when the indices sell down really, really hard, that literally everything will correlate correctly. Correlation can go out of sync. Absolutely correct. And when I was lecturing first and second year stats, one of the things was that I would always put up statistical charts from the news and say to my students, what's wrong with this chart? The other thing to bear in mind, the NASDAQ does not operate on the weekend. I've just put in the weekend band, and I share this indicator in the masterclass. The concept is there's no trading for the NASDAQ on the weekend, but crypto trades 24 hours a day, 7 days a week. It's just awesome. We can also see that the number of shorts inside the market is coming down. The shorts aren't really too eager on putting their money behind a falling market at the moment. And what we saw was a huge spike in short interest. That was the MiCA ban of Bitcoin in Europe, or the potential ban. And when that didn't happen, what happened? The shorts just covered their positions and came out of the market. But we already saw that it wasn't kind of what we typically see. When the short spike, typically price sells off. In this particular case, it went flat, meaning that smart money knew that it wasn't going to happen. I'd just like to share something quick with you. There's one specific chart on these 8 that I really, really like the look of. Can you please let me know in the comments section which one you think it is? And that is that I would put money into it right now. I wouldn't bother scaling down particular levels. I would basically say, okay, this looks about right. And sometimes you need to do that as well. Just bear that in mind. And that is a participation trade. And we talk about those in the masterclass. As crypto technical analysts, we also layer down, even if we participate. But just bear in mind, there's multiple ways that you can actually do things. Please let me know in the comments section which one you think it might be. One thing that you may like to keep in mind, and this is an actual trade from a masterclass member, and you can send me your trades if you would like on Twitter. Just reach out and directly message me, or by email as well. When you can see multiple levels of buy orders placed and then sell orders placed at specific points, this is the way to go. And a participation trade is just you enter around the current price, but you never buy at market. And this was an excellent trade. It was 16.13% in 2 days. Well done. I'd like to thank all the very kind and generous community members who've reached out and bought me a coffee on buymeacoffee.com/CryptoTradingKS. Thanks so much, everyone. And just to let you know, Nature Boy, thank you so much for your generosity. Nature Boy says, I've grown so much from your masterclass and continue to learn each and every day through your insightful and clear YouTube videos. Much love, my friend. Thanks, Nature Boy. That's so beautiful. And Raptors Owl. Thanks, Raptors. Belated thank you, Ken. Positive wealth to my KS family. We have such a beautiful community. Our community is a globally extended family. Please come and be part of it. And thank you, Vicente. Thank you, Ken, for your tireless courage and tremendous effort. Patiently, I continue learning in the masterclass. Vicente, you're doing so well. And thank you also to Amir. Inside the coffee club, for the people who have bought a coffee, I put a monthly video out, and they have different rules. And I always try to create something different that people haven't seen before, such as different takes on the 10-5-10 rule, Rule 305, Rule 420, Rule 40, Rule 402, and there's many others in here. All you do to access them is you just go to the post page. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and being part of our global KS family. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off. I've left that link in the description as well. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.